the war in Ukraine, just like COVID during the first phase in the first and second quarters of 2020, are creating first a massive rotation of assets. There are winners and losers, just like COVID, assets and issuers that are more exposed to the geopolitical risk or to the energy prices, to commodities prices in terms of agricultural commodities, etc. So that's creating a huge rotation of assets. At this stage, it's very complicated to segregate what will be the impact of this rotation of assets versus the impact of inflation, which could put pressure on demand and on supply, the impact of the supply chain disruptions and the impact of interest rates. We are confident for the rest of the year. We do see some slowdown in listing operations because the volatility of markets are not encouraging the more risky or bold IPOs. But we are cautiously optimistic for the rest of the year.
Stéphane, let me probe a little bit further on that because we often talk about the IPO window being open or shut. Would you say that window is now shut? And what does the pipeline look like in terms of reopening?
The pipeline is very strong. But everyone is exactly as you articulated it, is waiting for the right window. The pipeline is strong. There are many companies that look for liquidity, that look for raising equity to finance growth projects. It's just that sponsors, issuers, managers, boards are looking for the stable window where they can properly price a deal without excessive volatility. So I'm confident that as soon as market conditions stabilize a little bit, we will have a significant wave of listings and IPOs. It's a phase. It's not the beginning of a winter in IPO phase. It's just a pause.
Stéphane, can I ask you about derivatives in commodities, specifically wheat? Obviously, this has been a byproduct. The volatility has been a byproduct of what we've seen in Ukraine, but also, I guess, as a result of broader inflationary pressures coming from supply chain problems. Are we seeing orderly trading, do you think, currently in these commodity derivatives? You will obviously have noted the cock-up made by the LME of what was going on in nickel.
Oh, you're absolutely right. What we are seeing beyond your questions on derivatives is that physical realities and constraints and physical drivers of markets are back. Disruption in supply chains are impacting the performance of industrial companies. And what is driving the commodities, the soft commodities in particular, the ones we are the most familiar with, which are the wheat derivative contracts, corn derivative contracts, is a physical situation in the Black Sea. And the fact that Ukraine and Russia, who are very large producers of wheat, cannot export their products through Black Sea ports on the Azov Sea, like Mariupol or from Odessa. So this is creating volatility driven by fundamental underlying drivers.